Washington mornings on the Mall. 105.9 FM. And AM 630. WMAL.
Hey, it is 6:07 on WMAL, where Washington comes to talk. Brian Wilson, Brian Neiman, we're glad to have you along on this Friday, a day that I have dubbed Flip-Flop Friday. I think everybody should wear your flip-flops to work.
It's not quite summer yet, by the way. It's
I don't care. It's going to be 90 degrees this weekend. You can wear the flip-flops. It's okay. I said so. Just tell the boss. Wilson said it was okay. And that's all you really need to do. That's what I'm going to tell the boss later today.
Fine.
Peter MORICI is standing by. He's a University of Maryland economist, an all-around good guy. And what better time to have him here to help us understand what's going on in the world of finance, what's going on with the economy. God help us all. It's hard to figure out. Peter, how are you?
I'll help you for sure, Mr. Wilson.
I need all the help I can get. And by the way, my 401k needs a little help too. But let's start by talking to about what happened yesterday. You had Federal Reserve Chairman Ben Bernanke testifying up on Capitol Hill, and the big question, everybody thought that we would get some definitive answer on whether or not there would be something done by Fed to ease the situation. I'm not sure that it's a good solution, but a lot of people are looking for something called QE, quantitative easing. What do you think?
Well, the emperor has no clothes. The reality is that, quantitative easing is basically buying on the long end of the bond market, 10, 20, 30-year treasuries to pull down long rates and mortgage rates, okay? The Fed has done some of that. It has Operation Twist. It's also bought mortgage-backed securities. Remember, short rates are already close to zero. They have been for many years because of Fed action. The reality is so much money has left Europe and come to the United States that long rates are already pushed down in the United States.
Right.
They've dropped dramatically since the last Fed meeting. It doesn't sound like a lot to you, but 0.4% is a lot when long rates are already about 3%. I mean, they're below the rate of inflation. So the reality is there's not much he can do with Operation Twist. Short rates are already near zero, and announcing that he's going to keep short rates low longer than to the end of 2014 really would have no consequence. I'm writing an article for next week because we have the Fed meeting coming up in 12 days that basically says we are near a recession. That doesn't mean we will have one. Mr. Buffett says we won't, so it must be true that we won't. But, the guy's a very good value investor,
yeah.
But when you listen to him on the broad economy, people put too much stock in it. I mean, he's a value investor. I have a value investor that works for me. He's good at that, and I'm not, but he's not good at the economy. But in any case, there's really not a lot the Fed can do. It's out of arrows.
Well, look, you said Operation Twist. I mean, if you told Bernanke that he could get mortgage rates down to 3.5 on a 30-year fixed, I think he would have been doing cartwheels when they started Operation Twist. I mean, how low can you get with mortgage rates? I mean,
you also risk distorting the housing market.
Yeah.
You start to push up prices in places like Georgetown, which are not sustainable in the long term. When mortgage rates, if we ever get this economy going again, and mortgage rates go back to 5 or 6% where they belong, with inflation of 3%, so investors get a return. Then those properties are going to be worth less. You won't be able to resell them, and so you're going to have sort of like mini housing swoons in markets that had recovered too soon.
Right.
So you run risks of real distortion, and the reality is housing prices ought to stay down. They got overinflated during the Great Expansion. It was like the Tulip Festival in Holland years ago, the Tulip Bubble, and they just need to stay down.
All right, so what's likely to happen as we go forward here? I mean,
not good things.
Yeah.
I mean, when we got Greece bubbling out there, we've got the stock market all over the place. I mean, it's taken tremendous hits of late, although the last couple of days weren't horrible. What's the long-term vision? I mean, and how does that impact the political scene?
Well, the long-term vision isn't positive. If you peel back the onion on recent economic reports, like the jobs report, not only were the number of jobs created very low, there's no reason to believe that all of a sudden we're going to start creating 300,000 jobs a month. They might rebound a bit, to 150,000, but that's still not great. Yeah. But if you peel it back, what you see is some very disconcerting stuff. For example, a lot of the jobs growth is in healthcare, which is government subsidized. And that can't go on forever because the government is literally running out of money. Wage growth is absolutely flat. Real wages are falling. But nominal wage growth is now zero for hourly workers. That's very disconcerting. In manufacturing, prices are falling, according to the Institute of Supply Chain Management. Even service suppliers, more than half are reporting falling prices. Falling prices at a time like this would seem to indicate that people are slashing prices to move product. Productivity has gone negative. It actually fell in the first quarter.
Golly, that's not a good sign.
Well, yeah, and I love public radio. Let's pimp for the president. You're saying, well, that indicates that if sales go up, employers are going to have to add workers. No, what it indicates is that sales aren't what employers expected them to be, and if they don't recover, they'll have to lay off workers. Now, all the while, Mr. Obama's White House is pumping out in private briefings to the press, well, this stuff is really beyond our control, and if things go wrong in Europe, then we're really in the soup, a.k.a., blame Europe. There are a lot of things that should have been done, that could have been done, that weren't done during the period of grace provided by the stimulus package and low interest rates. The trade deficit with China, developing domestic oil and gas resources, which we are now learning makes a difference. Remember, he said, the price of oil and the amount of oil produced in the United States doesn't affect the price in the United States, global market. Well, the North Dakota oil is lowering gasoline prices now that the pipeline has been reversed in the Midwest. Think of how much lower they could go if we started developing the Gulf. Directing a lot of the public capital into things like Solyndra, very bad idea. The banks, he hasn't fixed the banks. He's amalgamated deposits in the hands of the largest banks in New York who aren't making loans. And the list goes on.
Well, let me ask you this then, Peter, because it's pretty clear the economy is not going to get better in the next couple of months, and there's a lot of waiting going on to see what's going to happen with the election and what's going to happen with the tax increases that are set to go up on January 1st. Do you think that Mitt Romney and just his ideology can actually change things?
In the beginning, I thought he could, but he's now gathering around him lots of Bush advisors and becoming insular. And he's really offering Bush redux, and that really plays into Mr. Obama's hand. Do you really want to return to the policies that have failed in the past? He's not offering a third way. And unless he does, he won't win.
Well, but what if he does win? I mean, do you think that a new regime with Republicans in charge will actually make the economy better? That's what I want to know.
Well, Mr. Obama's actually been making the economy worse. But I don't know that the Republicans will be able to implement many of the policies that they described.
Well, it depends on how the Congress goes.
Well, no, but consider this. You really can't cut taxes with a $1.3 trillion deficit. You can cut some taxes and raise others, but if you think that the bond market is going to... Remember when the bond market revolted against Bill Clinton announcing big spending increases, and Carville said the most powerful person on earth was the bond market? Likewise, if he tries to cut taxes and gives us a $2.5 trillion deficit, the only person that'll be happy is Paul Krugman, but he won't admit it because he doesn't care how big deficits are. He really can't do that. On trade with China, he's gathered around him a bunch of right-wing ideologues who are simply not going to let him get tough with China. On the banks, he says he wants to improve on Dodd-Frank. Remember, most of Dodd-Frank is in place. It's only the Volcker rule, and it is really hamstringing banks. It requires legislation to change a lot of that stuff. I don't see him getting it through the Senate, but what's more, I haven't seen a plan. He says, I want to improve on it.
Right.
On health care, how is he going to replace Obamacare if he doesn't believe in doing the things the Germans do to get it done better?
So you are bearish.
I am bearish
fair
right
to
now,
say. Yeah.
And I'm very bearish on Mitt Romney.
All right. We're going to have to leave it right there. Peter MORICI, it's good to have you on our show as always.